Buying a property might be a biggest purchase for you, and what you need to know after buying a property is interest rate. So in the market, there is a lot of interest rates that are fixed, that are floating, and under floating itself is actually breaking down into a few. What are the different types of interest rate in the market? This is one of the most common questions we get every day from our customer. So if you are buying a property, after you secure a property, the next bigger things you need to get it done is your mortgage loan. And after your mortgage loan is approved, you need to choose whether you are going for a fixed or a floating. So fixed, I think fixed is what we call is the safest package. For floating package, it's actually break down into Cyborg, Sora, fixed deposit rate, bank spot rate, and these are the few floating package available in the market. For floating package, most people actually choose Cyborg because that was what is commonly used over the last 10 years. But moving forward, Cyborg is actually going to be obsolete. So if you see, most of the banks today has actually already stopped introducing Cyborg into their interest rate package. They are all moving to Sora. Sora will be actually the new interest rate benchmark all the banks will be used. So if today you are still on a Cyborg package, what will happen within the next 2 to 3 years is that there will be a transition. So the banks will actually send you a letter and inform you that we are transitioning from Cyborg package to Sora. So you might be able to choose which package you want to go into. Do you want to go into a fixed deposit rate, Sora, bank spot rate for the transition? So my recommendation now is if you are still on Cyborg package, on your refinancing, it's actually good to refinance to a Sora package or fixed deposit rate or bank spot rate depending on your risk appetite. So for the main difference between a fixed as well as floating package is that floating is actually fluctuating. So even for a floating package, fixed deposit rate is still a floating package, which a lot of consumers has this misconception that fixed deposit package, right, is actually a fixed. It's actually not. So if you are currently on a fixed deposit rate, you'll realize that over the last couple of years, right, fixed deposit rate has been on the rising. Only up to last year during COVID, we start to see all the banks' interest rate actually drops. Cyborg before COVID was actually about 1.8%. Post-COVID today, we are looking at about 0.4. So that is the kind of drop we see over the last couple of years, and it has remained stable for the last 1.5 years or so. Starting from September, we saw an increment in terms of Sora. It's not a big jump. We saw that it is slowly increasing. So this is some of the trend we saw for Sora package, which has been stable since 2020 January onwards to now. This is the trend we are seeing. That might be a potential increment of interest rate. We will know. It all depends on the market sentiment. The Sora package is a Singapore overnight rate average. So it's actually regulated by MAS. So Sora is actually based on the past 30, 60 or 90 days trend. A lot of times we have our clients asking us, Kenneth, is it better to choose a Sora or a Cyborg package? Cyborg is actually a forward-looking interest rate. So what I mean by forward-looking? So basically it's based on the market sentimental. Based on the past, what we saw, every time when US announced that they are going to increase the interest rate, we will see that will be a hike in terms of Cyborg. US Fed announced that they are going to increase interest rate, we will see the Cyborg going up. So that's what happened in Singapore market when we are using Cyborg. But as for a Sora package, it is actually a backward. They actually use the last 30, 60 or 90 days average to actually present the rates. Even though if there is a sudden spike from 0.155 to example 1%, it will still be averaged out over 30 days. So you will not see that will be a sudden spike. If there is an increment, it will be a gradual increment on Sora package. So this is one of the main difference. Now what we can see from banks' perspective is that they are all moving towards Sora. Most of the banks has actually stopped offering a Cyborg package. They are all transitioning to Sora package now. So that's one of the main difference we see. So in short, Cyborg is actually a forward-looking interest rate, which based on market sentiment, based on the news, you will actually increase accordingly. But for a Sora, it's actually a backward-looking interest rate. It will use the last 30, 60 or 90 days as an average for the Sora packages. The benefit for a Sora package is that even there is a sudden spike, you won't have immediate impact on your interest rate because it will still be averaged out over the last 30, 60 or 90 days. Whereas the Cyborg, once it increases straight away on your next month installment, you can see that it's a different in terms of your interest rate. Another very common questions we get from our clients is it better to go with a fixed or floating package? I would say for fixed, it is stable because there's no fluctuation. So be it market going up or down, if you are on a fixed rate, it does not affect you. Floating package is usually lower than a fixed rate because it's a fluctuating interest rate. So usually most of the banks has example, a 1 or 3 month Sora. What does it mean by a 1 month or 3 month Sora is that for a 1 month Sora, it actually changes the interest rate every month. So from month to month perspective, your installments might be changing depending on what is the Sora. Whereas a 3 month Sora, it actually changes by quarterly. So it's every 3 months you might have a slight movement in terms of your monthly installment. To explain in a more layman term, I would say that for fixed rate, it's usually higher than a floating package. So it's like buying an insurance. You're paying slightly higher in terms of your premium for your monthly installment versus a floating. This is one of the benefits if you are getting a fixed. You have the stability, you have the certainty for the next upcoming 2 years or more. For Sora, the advantage versus a fixed rate is that it is lower, and the monthly installment, of course, having a lower interest rate, that means you pay lesser interest on your mortgage, and this is the advantage of getting a Sora package. Another benefit about floating package is that in the event if you want to sell off your property, they do have this special clause called sales of waiver. So in the event if you sell your property within the lock-in period with the banks, they will actually waive off your penalty of 1.5%. So imagine if your loan amount is 1 million, and if you're selling within the next 2 years, you need to pay a 15,000 penalty if you're on a fixed rate. Whereas if you're on a floating package, the banks actually waive off this penalty for you. Another benefit about floating package is that they actually allows you to make partial repayment as and when. So some of the banks actually allows you to make partial repayment up to 50% on your outstanding loan amount. So these are the advantage for a floating package. If you still find it confusing to go for a fixed rate or a floating package, you can speak to one of my colleagues. They can actually go more in depth and understand your needs and wants and do a recommendation to you based on your situation. So you can just click on the link below and fill in your detail. One of my colleagues actually will reach out to you to advise more in depth on the interest rate packages. Another tip for you, if you are opting for a floating package and you bought a building under construction, one of the very important thing is a lot of customers miss out. Sometimes it's good to go for a 2 years lower interest rate and maybe on your 3rd year is higher. So if you are buying a building under construction, take note you are only eligible to go for floating packages. So meaning to say is example Sora or fixed deposit or bank spot rate. How do you choose the correct interest rate package for a building under construction? So number one, you need to know when does your property TOP. Okay, because in the market there are interest rates which are lower on the first 2 years, on the 3rd year it actually increase, whereas there are other interest rate packages which are perpetual from year 1 to year 5 in terms of the bank spread. So averagely for a building under construction property interest rate as of today, we are looking at about 0.8% plus 3 months Sora, so about 0.95 this region. So this is good for people who are buying a building under construction and it TOPs in the next 4 or 5 years time. Whereas if you bought a building under construction property and it's going to TOP within the next 2 years, you can leverage on some interest rate which are only 0.7% plus 3 months Sora, and all in is about 0.85 thereabout. So this are the advantage if you are going for projects which are going to TOP soon. Another thing to take note, so if you are going for a 2 years which is at a lower spread, usually the 3rd year is a bit higher. So what you have to do is that usually the banks has this course called one-time free conversion, meaning to say upon collecting your keys, you have the option to choose another interest rate package, or for example, you can switch to another floating package or a fixed rate. So it makes more financial sense that if you choose an interest rate which is lower on the first 2 years, although 3rd year is increasing, but you have the option to change. But on the other hand, if your property is only going TOP in 4 or 4 years down the road, it doesn't make sense to choose an interest rate which is lower on the first 2 years, because the bigger chunk of the loan is actually dispersed towards TOP. So that is how you should make your decision in terms of your interest rate package. Once again, my name is Kenneth from Keyquest Mortgage. If you like the video, hit on the like and subscribe button. If you would like to find out more about interest rate or any other sorts of information related to property, you can comment below. We might pick up your comment and actually do up a video to address to your concern.